And good morning, everyone. Welcome to April's first Friday 401k. I'm Timothy Yee with Green Retirement, accompanied by Rose Yee and James Yee. No, to work at Green Retirement, it is not a requirement that you have the name Yee. It's just that all three of us are related. Rose and James will both keep an eye on the chat box. As anyone who's ever worked in financial services knows, we love disclosures, and accordingly, I am a registered principal offering securities and advisory services through Independent Financial Group LLC, IFG of San Diego. Go see the folks on High Bluff Drive. They're really quite nice. Past performance is no guarantee of future results. Member FINRA, SIPC, IFG, Green Retirement, and NIA Global Impact are separate entities. With the disclosure out of the way, it is my pleasure to welcome longtime friend Dr. Kristin Hull. Kristin, always good to see you.
Wonderful to see you, all of you. Yeah, thanks for being here. We could be a lot of places on this market crashing day, and I'm happy to be here with you.
Uh, I first met Kristin going back to 2010. We were over at Lake Merritt at an event, and I explained what she did, what I did. Her eyes lit up, and it's been nothing but introductions and wonderful work ever since. Really appreciate you being here. For people, though, who don't know you, Kristin, could you give us a little bit of your professional background? How long have you been in the markets? Is this something that runs in the family, or did you just stumble into this? Tell us all about you.
Thanks, Timothy. Yes, this does run in the family. Not so much impact investing, but I did grow up in a trading firm, and my dad started a trading firm in our garage, in California, as one does. And at the age of 14, I was working in the firm, working in the garage, spent summers. Once the firm moved to Chicago, I was on the floor trading with the traders. I was a clerk, and puts, calls, pork bellies, commodities, the price of rice in China influencing things around the globe, and looking at buying low and selling high as often as one possibly can. That's what happens in a high frequency trading firm. And of course, impact investing is a different genre of being in the markets. And in 2007, I transitioned. We had sold the family firm and had started a family foundation and wanted to put our assets to work for the things that we wanted to see. And I think, as we all know, we do get the economy we invest into. So shifting to a buy and hold model where we can actually influence the economy by the investments that we make. At NIA, we make investments into companies that are striving and deriving purpose from their very revenues. So purpose baked. And Timothy, we know that together as we're B Corps. And so we, both of our firms have committed to profiting from purpose. And so that is the style of investing we do, and investing into companies that invest their own products, services with purpose.
Well, let's take a dive into that. I mean, I like purpose baked. I like diving into purpose, but generally, impact investing gets lumped into ESG or SRI. How does your firm define ESG? What goes into the thinking?
Okay, well, Timothy, great question. We could spend lots of hours on this. I think we're not on the Senate floor having to do this for hours and hours, but we are really conscious investors. And really, to us, that means understanding what we own, knowing what we own, and being really purposeful in directing capital to companies that we know. So if we think about, you use the letters SRI, socially responsible investing, and that's kind of the shoulders that we stand on. That was really taking the incumbent economy index and whittling it down, saying, okay, we don't want to invest across the market. There are some industries, and this work was largely led by the nuns,
Oh,
about saying, we don't want to own tobacco. We don't want to own adult entertainment, for example, could be cigarettes, alcohol. There were lots of kind of genres of things that are now known as the sin stocks. And are we going to take out the
mhm.
sin stocks? I would add in weapons and fossil fuels to that list. I would also add in soda. That's something,
Interesting.
yeah.
Interesting. Okay. Childhood obesity, I see that. Negative impact in minority communities or low income communities. Hmm.
Yeah, absolutely. And then also some of the known companies that are working on soda, predominant brands like Coca-Cola or Pepsi are also the largest plastic producers and plastic
Mm,
distributors.
mm,
Um, so there's some implications there. And so actually at NIA, rather than starting with an index and then taking out the bad players by someone's screening mechanism, we actually flip the script and we
hmm
say, what is the world that we want to live in? What are the best outcomes for people and planet? And then pair that with what the market will reward for.
hmm
From there, we've developed using systems thinking, 6 solution themes. And they
hmm
range everything from sustainable planet to natural and organic foods, healthcare, education, communications, and we invest into companies whose revenues come from one or more of our 6 solution themes. So our portfolios are more concentrated than the traditional SRI, which generally tends to mirror an index. You
mm,
also
mm.
mentioned ESG. So it seems like we ought to get into a little bit of the weeds there as far
We
as
will, but I do
environment.
see Rose has a question for you. Go right
Oh,
ahead,
let's do
Rose.
that. Let's go for it.
Well, thank you, Kristen. That's really most interesting. But maybe for our participants, might you just give like a really brief differentiation between like an index fund and a managed fund like NIA?
And
Sure.
also, how does your view of ESG differ? I mean, there's some, as I think about ESG investment companies, a bunch of names come to mind. What makes yours stand out? How are you different?
Okay, a couple of questions there. Let's see how we can address both. So the letters ESG, environment, social, and government, mean lots of different things to different people. So some of them say this is a way to reduce risk by looking at how is climate or social or governance issues going to affect the company and how would it affect my returns.
Hmm.
An example of that would be some of the hurricanes that are happening in the South.
Mm,
Today, actually, from Tennessee to Texas, we're having some pretty incredible weather. And if you have a factory or a business ownership or a storefront or any kind of pipeline interest, you're worried today. You're
mm,
something
mm,
could possibly happen as a risk to your company.
mm,
Um, so that's one way to use the E to think about reducing risk. And so does that mean relocating a factory to a place where there might be fewer climate situations? That's one example of reducing risk with the E. Social is a lot about, for us, human capital management and some of this type of thinking, I actually learned from Paul Herman, who I believe is on this call, just as far as thinking about and what we ask our companies to think about, where they hold employees on the balance sheet. So for the S, we're thinking about, are employees actually on the asset side of the balance sheet or are they on the expense side? Are they
ah,
an investment to be invested into, to be nurtured, to be grown, offering education, offering promotions? Or are they something that could be disposed of? And we look to our companies to see how they're holding that. We know that loyal employees, particularly through the pandemic, and it's going to be again through these times, are going to be really important for companies. And so we want to invest into companies that are holding that S in a high regard. That S
mm,
also turns out to have a lot to do with brand and how constituents, it could be customers, supply chain, clients, how are they seeing the brand, the social aspects of the company? And then governance speaks pretty much to itself. What is that executive team doing? How is the board accountable to the growth, the sustainability, the purpose of the company?
that is that really hit it. I had to chuckle. I was thinking back to my days in corporate where I very much was on the expense side. We were looked at simply as widgets, replaceable widgets, and when things went south during one of the mergers, I remember getting the call from upper management, look at each of your teams and find one person to fire. We need to cut costs. I just like, what? How about performance? How about if they're all performing? What do we do? And in my case, I had a team of four. Oh, golly, not good. I see another question from the lovely Rose.
Thank you, Kristen. I really love that principle philosophy that you have of asking whether employees are on the balance sheet are assets on the balance sheet as opposed to liabilities. And I just wanted to check in with you because Paul has done years of study on executive compensation. So is are wages a part of this? Is wage inequality part of that metric that you use?
Absolutely, absolutely. And as you know, being a B Corp, that's a way that we organize our own firm to have fair and living wages. We also want to have competitive and really nurturing wages at NIA, and we look for that in our companies as well. We also are one of the first US companies to be Gender Equity Now certified. And in getting that certification, we looked at all of the research about pay equity across not only genders, but ages as well as difference in ethnicities. And so we bring that lens to the companies that we look at. And as I think we can all recognize now, CEO pay is an extreme issue in the US, as is wealth inequality. And so at NIA, we only invest into those companies that are paying a fair and living wage.
Mm.
And that actually works out, and it's not an issue for us because we are investing in solutions focused sectors of the economy. Those generally pay well. Of course, if you're investing in Europe, that's pretty much a lot of these criteria are taken care of because they have different criteria for their own countries that really work out well in our investment theme. In the US, certainly fast food, which doesn't fit our solutions focus anyway. But so that also wouldn't fit for us as far as what does it mean to pay a fair and living wage.
It's a good thing that Rose brought that up, folks. Fair and living wage really does fit into the overall discussion that I'll drop into the chat, but about wealth inequality. And one of the people that I'm really enjoying listening to, following, is Gary Stevenson. Gary from, well, formerly Citibank. He was a short-term interest rate trader, made quite a bit of amount of money in the pandemic of 2008, betting on which way economies were going to go. And Gary saw that wealth inequality was going to increase. He bet correctly in that, but then he realized he needed to start doing more than just making money. He really needed to start talking about the issue of wealth inequality. I popped it into the chat box. It's very important to take a look at as he traces wealth inequality and social unrest and quite a few issues there. Kristen, I know we're going to dive deep with some of your slides into things like biodiversity, gender equity. We're going to talk about climate, but I just wanted to pivot briefly to your thoughts on the market. Yesterday, the Dow was down 1,500. Last time I checked this morning, it was down another 1,500, approximately $2 trillion wiped off the books. If anybody wants to see a funny video, you can see the Restoration Hardware CEO's fourth quarter call, where he's going over the numbers and his reaction as he sees his own stock getting hammered by tariffs. How are you viewing the economic lens and your buy and hold strategy? What thoughts do you have? Again, folks, we're not making any recommendations here. We are not suggesting anyone do anything. I am asking an investment professional for a professional opinion. Kristen.
Yeah, thank you. And today is certainly up to anyone. We saw this coming. Did we see it coming in this particular way? He's been talking about, I guess our president, we'll just name it, where the chaos is stemming from is the White House. And we've seen this and we navigated through the last, 1.0 presidency, and some of the stories that we learned from that case were particularly for renewables, tariffs with possibly Canada, possibly Mexico, definitely China, but not knowing how much, which day, which week will, and so there was quite a bit of chaos in the first presidency. And what was interesting about that is that we did have a lot at that time companies that were producing things in the US, which really helped. Another thing that was interesting for us about that time is we do design portfolios with a gender lens. So all of our companies do have women in leadership. And that criteria kept us out of some of the countries that had tariffs at that time. And so portfolios inadvertently, through that design, ended up performing better. Jumping to today and Trump 2.0, we have a whole different ballgame, a whole different situation here. So where we're really looking at what are our global agreements as far as free trade as we know it. And so what could possibly be being undone as we speak are our relationships. Will Europe go next? We've got some retaliation from China. Well deserved. You spring it on us, you spring it back. The Mexican president is also talking about the same. Canadians have already spoken out about how they are looking to buy Canadian, and they have been, for the past several months, they've already consciously, before tariffs even got to that point, we're saying we're going to buy Canadian. So yes, we're having extreme market volatility. Will that influence inflation? Absolutely. Will it influence spending power consumers, which in the US, they count us not just as people, we are considered consumers. And if we aren't doing our job consuming, basically it's going to flip the economy upside down. Welcome your thoughts too. Rose and Timothy, what are you seeing today and this week?
Definite concerns, folks. I'm going to pop a couple of links in here. The first one about the impact of tariffs on the U.S. Depending upon which study you read, anywhere from $3,000 to $4,200 increased economic hardship on the average American household. The uncertainty, of course. Yeah, we were up in Canada just 2 weeks ago, and a friend of mine had mentioned that he was looking for a particular Canadian liqueur, and if I could just take a look while I was passing by a liquor store. So sure enough, I went to the store and it was plastered with signs, support Canada, and quite a few signs saying no American products available. We will not do business with the red states. So yeah, it's an interesting paradigm that's being brought to negotiation. And Rose, I do see your hand. The president's style of negotiation seems to be very much one-on-one. There's a winner and a loser. And to your point, Kristin, the world tends to focus more on relationships and global patterns, longer-term relationships. And I think that's being missed in a destructive negotiation where there's a winner and a loser. Perhaps this might work, but in a global economy, I don't think it does. Rose, what are you seeing?
Well, just before you pop in, I'll just respond to that. Some of the things that we look for in the companies we invest in is collaboration as far as what is a circular economy. And so if our companies have a byproduct, possibly a waste product, rather than that going to waste, is there another industry where that could come from? Same thing for their inputs. Is there any ways that they can partner with other firms in different ways to have one waste product become something? And neither of these are NIA portfolio companies. So I think it's a nice example where tequila company has byproduct of different fibers coming from the agave in the tequila making process, and taking those fibers and delivering them somewhat close by to the car manufacturing company that is going to take that and put it into some sort of insulation, and using that fiber in the car making process. So those are the types of relationships we're thinking about. One of the other plays as far as circularity and sustainability that we've been talking to our companies about, particularly biotechs, and this is kind of interesting, I think, because our biotech companies know 100% that they are saving the world with their healthcare solutions. And we believe that as well. And yet a lot of one company, for example, sending remedies and preventions of HIV to Southern Africa, they're doing that in single-use plastic. And so some of the conversations that we have, we do seek to have a conversation and a relationship with every one of our companies. And in this particular case, we said for scope 1, 2, and 3 carbon emissions, we're really looking for all of our companies to reduce any use of plastics. It also comes up very much in the trade situation because most of the single-use plastics that a lot of these companies are using comes from China. So how can they come up with a more local and then also more sustainable way to transport some of these things and package them? So those are some of the situations we're looking for and creativity across collaborations. And we would like to see that play out on a global scale. And of course, as we mentioned, we don't know how much any country is going to be able to or be willing to do business with the US after what's happening.
True, true. I mean, in a destructive negotiation where there's a winner and a loser, yes, you may win in the short term, but in the long term, you'll find that you're the only player left on the playground. Everyone else has just left to go somewhere else. Rose, you had a question, and I'm going to tackle what Selena has asked in the chat box. Rose?
No, I just wanted to bring up a personal comment. Experiences that we had when we were 2 weeks ago in Victoria, British Columbia. And so, in addition to what Timothy mentioned about the liquor store, there were articles on the local paper, one about a grocery store that has stopped ordering produce, ordering goods, anything that's made in the United States. And then, second, was an article from a food bank that is getting a deluge of donations, very rich in donations right now because consumers, residents in British Columbia are cleaning out their pantries and taking out anything that's made in the United States and donating it. And they are in line with that, not buying anything that is made in the United States. And so what we saw there was I would say, a heightening of a sense of nationalism in Canada. And with, I not to extrapolate it, but I think that there's, and I would love to hear from Paul, who is in France, whether that is also being said in the newspapers there and with everyday people. We went to the we went on a tour of the British Columbia legislature, and in the gift shop, the woman there was saying that more and more of their tourists are domestic tourists. We got the feedback from a lot of the people that we spoke to that instead of traveling to the United States, Canadians are traveling to British Columbia, which is good for their tourism industry. And so I think that from a real life perspective in countries not in the US, there seems to be a rejection of United States goods and products. On a macro scale, I am wondering, and if our guess if Kristin or if Paul might have a comment on this. I'm wondering if BRICS would have an impact, because as opposed to the first Trump administration, where I believe BRICS was essentially still in the formation stage, or didn't have much of a leg under it. It seems that now they have more power. They have more countries that have joined. I think if I don't I'm not an economist, so I don't really pay close attention to the GDP numbers, but I believe that more than a third now of the global GDP is under BRICS, and so might that be an area of concern that we need to look at as investors here in the US and as participants. And this is now leading to Selena's, how do we, participants in the 401k, we're happy that we have NIA as one of the funds that are in our 401k lineups, as well as HIP investor models. But yes, what can we do as participants here who are concerned about our retirement savings?
Not
Sorry,
that we're
that was a
just
lot.
dumping a ton on you, Kristen, but while you think about that, folks, one comment I will make, particularly Selena, where you're saying 5 years to retirement, somebody who's in that short term a time frame, and again, I'm not giving away a state secret here, but somebody certainly can put their money in a money market. In all retirement plans, whether with me or another advisor, you'll have something called a money market. I think of it similar to a cash account. It earns a nominal rate of interest. Yes, it does have risk. Any investment has risk, but generally, money markets tend not to do very much. They strive to keep the share price at $1 per share. That's the definition of a money market. And they are very short term loans, sometimes to the US government or to companies. Back when I was studying securities law last century, I learned that a money market loan typically is 7 days or less, so very short term. Anyway, for people who are concerned about volatility in the market, that is a possibility. Other people have been talking about gold. Of course, I'm old enough to remember all the run ups in gold and then the crashes in gold. Kristen, what would you say? And also tying into Selena's comment, which was tying back to yours about foreign investments in companies or countries that do it right. What countries do you find doing it right from a gender perspective?
So lots of questions there. We'll see what we also, I don't know if Paul's here and wants to speak about France or
Yes.
Europe, and please, those of you living there, very interesting insights, right, about just the sentiment. I actually just had a few conversations with people, German people living in the US and then also Germans living in Germany, who are just arms up, just not just kind of appalled, sitting there appalled about just about everything, and certainly canceling trips. So as far as tourism industry in the US, we don't invest in that area, and yet I would be cautious, for unless we're all turning to our own internal tourism. That's something that we would definitely be watching. Then as far as we certainly have shifted. We are a global portfolio, so we do invest in companies around the globe and, looking always for revenues diversified. So diversified across but sectors, product services, as well as countries. So certainly looking to have diversification being a key. And then, Timothy, you asked about gender diversity. In the US, we go company by company, and we actually have a Change the Face of Finance internship program where we train our interns to look company by company. And we use Bloomberg tools and we use other analytics, and yet not often up to date, and they're not always as accurate as we would like them. So we do go company by company, and we have companies looking on the website, and then we ask the companies to confirm. As far as where we don't need to do that as often, Europe, particularly for boards, has quotas and standards where women are actually required to be on boards. And so it's actually easier due diligence and investment wise for us to invest in European companies. And then the opposite would be true of Asia, and a little more challenging in Canada as well, where they don't always have women in leadership. One of the things we do look for are women CFOs. We are seeing some interesting research there, and then also our own anecdotal that we want to put out research as far as stronger companies, stronger performance. We do see both on the anecdotally and then research-wise, companies that have 3 women on the board have interesting outperformance. Some of it is anecdotal and some of it is just really about efficiency. Companies with women on boards tend to start on time. And we want to see for governance as being really strong. We also know that women stereotypically are more likely to ask a question if we don't understand something. So if this year's numbers don't match last year's numbers, we are much more likely to ask a question before voting on that. slows down the meeting a little bit, much more thorough, not always well liked. Because there's the 19th hole or there's the 5 o'clock cocktail hour. If we just wrap up this meeting, and yet we want some clarity. That also plays out in the ballot box as far as voting. Women are less likely to vote for initiatives or candidates that they haven't met or don't understand. So we do see that playing out in our investment thesis.
Nice, very nice. All right. Well, we've touched on diversity. We've talked about gender and why it's important. I know you also wanted to, with an eye towards Earth Day, you wanted to speak a little bit about biodiversity. And I must say, Selena, I just keep looking at those open fields and thinking, gosh, I was 45 this morning when I was out walking. I could use a little sunshine and fresh air. What are your thoughts around biodiversity and why is that important to the work that you do? And let me just make sure that sharing is enabled. It is. Good, good. What do you want to say around biodiversity?
Yeah. We do get the economy we invest into, and we get the world that we are investing into, and the role of the investor to support biodiversity. I couldn't state that stronger. We do know that government policy can be really, really strong as far as supporting biodiversity, and yet we are not seeing that, particularly coming from the US. And so, how can investors play the role that they'd like to is ensuring that their companies are doing a really good job and at least having this as one of their investment and impact criteria. And so we are looking at specific measures, one of them being carbon. And I believe we have a slide that looks at our carbon output. And I want to give a shout out to Nick and Cole and Paul on the HIP team who help us with these numbers each quarter. And so we are looking at carbon intensity, and specifically we're looking at solutions focused products and services. So it's not like we're looking at, say, Chevron's easy to throw under the bus, so I'll just pick that company. We are we are fossil fuel free by design, and a few reasons. One, probably I don't need to explain to anyone on this screen why fossil fuels have been an issue, both for the climate, particularly for biodiversity, but particularly for returns. And I didn't include a chart about that, but if you look back.
Let me share the one on carbon because
Okay. Yeah.
and there we are. So
Okay.
maybe you can just unpack this and could you just, for people who aren't as familiar, scope one, scope two, scope three, and Paul, I do want to make sure we get you on the horn about what you're seeing U.S.-France relationships from your vantage point, but could you just unpack this a little bit for us, Kristin?
Yeah, absolutely. So one of the things we ask our companies to report on are their carbon emissions. And carbon emissions are generally at this point kind of broken up into scope 1, 2, and 3. So scope 1 is if you think of having a factory, what is the smoke or the emissions that are actually coming out of that factory from the lights that are on, from any heat that is generated from whatever you're producing. If you think about anything that's actually coming from the things that you're producing, that's your scope 1. Scope 2 can be thought of as the things that you're buying. So say you're a coffee producer, you're going to have coffee coming, but it's also thinking about, well, what are their emissions can be, and then also what does it cost to get them to you as far as carbon. So if you're putting something on a ship, those types of things generally get thought of as scope 2. And then scope 3 is kind of the life cycle. So if you think about with my phone from Apple, where does it go? And what is the energy that it's using? So it's left Apple. They've produced it. That was scope 1, everything it took for them to get all of the parts and mechanics into this, getting it to me to the shop, everything scope 2. And then what about the emissions that are coming from that phone? Like when I'm plugging it in at my own house, what's happening there? And then also when I dispose of it, what's happening to that? Where did those emissions go? So it's a way to kind of think about, and of course, scope 1 is the easiest to track. You really have the most control as a company of what that is. Scope 2 and 3 are harder, and depending on what type of a company, scope 3 is, one of the largest carbon. And so trying to really kind of rein that back and get control. And one of the things we just had actually a conversation with Lowe's that is not in our flagship portfolio, but it's another company we think about, particularly when it comes to racial diversity and equity. And they were talking about how they think about scope 3 and the changes that they're making. And so just one example of scope 3 that has to do with biodiversity is water. And so they are in their stores, they are selecting to have low water washing machines as one example. So, and that's a choice that they can make that really affects their scope 3, because when they are selling low water washing machines, then their scope 3 for how much as individuals and consumers we are using, that affects them. So that's one way to think about it. So for us, we do have conversations with our companies about how they think about biodiversity. And so as an investor, they listen. And I think that's important for all of us to know, because we are all investors and we can all use that investor voice to one degree or another to make change. And so by putting biodiversity on the radar of our companies, we get them thinking how they're addressing it, how they're reducing their effects. And then just back to Chevron, oil and gas industry in general, they are either through pipelines transporting their, I'll just say, gas to be refined, oil to be refined, goes through pipelines. It also gets transported on ocean liners. And I believe last time I looked, it was about 80% or more of all of the ships in the oceans are transporting oil or gas. And so, of course, biodiversity wise, that does interfere with migration of whales, when it spills, all of the things that
Exxon Valdez, yes.
Exactly. So these are ways that with a conscious mind, we can build portfolios that are more friendly to biodiversity.
And hopefully a healthier company might produce better returns. Again, we're not making any predictions or getting out a crystal ball. That would be silly, but it certainly does make sense where you're going with this. Right.
Well, there's, the environmental efficiencies of not having spills to clean up. And then when we go past governance as well, there's brand risk that can come with some of these environmentals. So there are certainly some metrics that go into a better performing company when they are keeping biodiversity in mind.
No, definitely understandable. Yeah, I could see how difficult it could be, though, to measure your scope 3, because you don't know, using the phone as an example, you don't necessarily know what the individual consumer is going to do. But certainly scope 1, it's very easy to measure, or relatively easier to measure. And scope 2, you have some control over how it is shipped. I guess sort of as we've tackled all the individual components that go into it, and again, facing today's market, what exactly are your thoughts about what does an investment manager do? You come in 6:30 in the morning, markets are now open, markets are crashing. What is it you do on a day-to-day? Is it conversations? Is it buying and holding and looking for new opportunities and where to exit? What exactly is your work?
Okay, so thank you for asking, because I think there is very little transparency into what an active manager does, right? And so we have our 6 solution themes, and we do weave a gender lens and an eye for racial equity throughout everything that we do. So rather than, as we talked about in the beginning, start with an index and use some sort of a formula and screens to kind of whittle down a portfolio and run it through some Bloomberg type algorithms, what we do is a little bit different, and it's much harder work because we are starting oftentimes with the academic literature. So we are diving into learning about what is the research behind some of the healthcare that we care about, who's doing the very best work, and then can we find a team that's actually in a company that's publicly traded that is then accessible to our portfolios. Sometimes that weaves us down into a rabbit hole. We end up meeting with entrepreneurs of privately held companies. And in that way, we get to learn about emerging technologies, particularly when it's coming to, I mentioned a couple of times, we're really looking for sustainable packaging. And we don't have enough exposure to that in publicly traded companies. And so we're keeping our eye on who's doing the very best job. of that in some of the privately held companies. So when there is growth, IPO, merger acquisition will be ready in sustainable packaging. So at any rate, a lot of it is research, a lot of it is reading. Um, and then, of course, our analysts are monitoring our positions. How are they doing? We're listening to earnings calls. And then, as I mentioned earlier, we're actually having our own individual calls with every company in our portfolio. So we are lining up those calls. We are building relationships with the people behind the tickers. And we'll also meet, to the extent that we can, with employees from all of our companies. And we get to know their insights. What is the employee experience? And what are they excited about? What are they fearing? So just to get a different sample of what's happening at these companies.
Excellent. Excellent. Rose mentioned to me that I missed a question, and my apologies, Nick. Nick was wondering what areas are you finding climate solutions in? And I wanted to tag on to that since you mentioned Exxon. I remember reading probably a good decade ago that Duke was a large investor in wind farms. And then I started to scratch my head and say, isn't Duke an oil producer on the East Coast, Southeast somewhere? Could you share your thoughts to Nick's question about climate solutions? And what do you do when you face a company that is both in extractive but also working in renewables? Blah, blah, renewables. I can speak after one cup of coffee, I promise. Go ahead,
Yeah,
Kristin.
absolutely. So, and that's a really interesting question for investors to think about, because if we don't have the chart today, although I love this chart, we could have, should have put it in here, is something, and we can mail that out to people that are interested. But basically looking at the 10 or so different big sectors, which is the way Bloomberg kind of divides up our economy from consumer to healthcare to tech to et cetera, all the way through to fossil fuels, which they call either traditional energy or oil and gas. And at any rate, when you look at, had you invested $1,000 10 years ago and then where we are today, although I'll say I haven't looked at it this week, but pretty much this chart holds up. If you think about which sector of our economy has done the best over the last years, that's tech. And so you can see that line kind of coming up and over. Healthcare is pretty darn in there, a little bit below tech, consumer cyclical, consumer staples, whatever. And then you get down to fossil fuels, and the only industry that had you invested in fossil fuels in the last 10 years, you would have lost money, oil and gas. So they do a really good marketing job of getting us, and also they get government subsidies that keep them going. But as far as renewables, if I saw the writing in the wall of a business that just had no future, I would start to pivot. And some of them have done so. They have started that with their marketing. So if you see a lot of these traditional, Exxon, Chevron, et cetera, have quite a bit. When you go to their websites, you'll see renewable energy, you'll see green, you'll see all sorts of things that would lead you to believe they're sustainable, and yet much lower percentage of their cash flow is actually going into renewables. So it really depends on what type of investor you are. We are really looking to avoid any extraction from people and planet to the extent we can. There's no pure play, and yet we have been fossil fuel free since inception. And we're also fossil fuel free adjacent, meaning that we're not invested in any airlines because they are large consumers of fossil fuels. We're not invested in a lot of plastics or plastic producing companies because that really does come from fossil fuels. So we're not invested in any traditional automobiles because they are, largely relying on fossil fuels. So it's really an investment thesis. There are some investors that are looking to invest in the transition. We are more about solar, wind, certainly interested in geothermal. And geothermal is interesting in that it is somewhat bipartisan. And so that is as far as looking where there could possibly be political support in the future. Geothermal is interesting for us. So, and then we certainly are looking for companies which can help with the mind shift so that we can all be consuming less. So any circular economy plays, love public transportation, love buying locally. So all of the companies that are supporting those types of consumer behaviors.
Fantastic. Rose, why don't you pop in with the question?
Well, I love that fossil fuel free adjacent
Mm,
thesis, Kristen. That's really significant now that we're looking at, those scope two, scope three emissions. I want to bring us back to what you do as an investment manager in terms of the activism that you do in the investor space. So, can you share with our participants how an investment manager could be an activist and lobby in a sense, not lobby, but bring up issues at
influence.
corporate meetings?
Yeah, thank you, Rose. That is something that is somewhat unique to NIA, and we are very dedicated to this. So, both in our ongoing due diligence, I mentioned that we do seek to meet with every company. We also see ourselves building win-win relationships where we can, and we also have a high level of expertise across the E, the S, and G that can lead to better business practices, whether it's better efficiency, whether it's letting people know about women CFOs, women in leadership, some of the human capital issues that we've talked about. And so, Rose, you might be referring to, we've certainly advocated with small and large companies to have really transparent human capital management. And some of the examples there are NDAs or concealment clauses. And we actually had Apple remove NDAs from their employee contracts. And while it took a year and a half, and we did go to the SEC and we had investors vote on that via their proxy statements, via resolution that we filed with the SEC, many conversations with the company and management as well, we got everything that we asked for. So we wanted NDAs removed from employee contracts in the US. We wanted international employees and contract employees, and they did all of that. We actually asked for a report on the effects of NDAs and employee contracts. And we were particularly concerned for women and people of color advancing in their careers. And an NDA is really like a Band-Aid. It can cover up and conceal both from employees, but also managers, what's actually happening within a company. And we see that with greater transparency, there can be better results. Similarly, with forced arbitration. And we have had forced arbitration removed from many companies. We have been at it at Tesla for quite a while, and they have not yet removed forced arbitration. And actually, based on the lack of response to investors, as well as a few other G aspects, governance, that we look for in companies. One example is that we do need the CEO to report to the board in all of our companies. And we found that at Tesla, that of course wasn't true. We did have a win at Tesla after having removed it from all of our client portfolios. We did keep some, and we kind of moved it over to what we're calling the activist portfolio, because we met so many employees at Tesla that had suffered discrimination. And there were hundreds, and we just knew it was a pervasive problem. And so we were going to keep at this, and we'll continue to engage. So we'll continue to hold some shares so that we can kind of have a seat at the table in that kind of situation. Another, more on the win side, we had IBM increase their diversity reporting and their amount of resources that they were putting towards their diversity programs. And we won that at 94% of the vote, which was pretty significant. So we're pretty happy with some of those. And then most of the change that we make doesn't make the headlines. We're doing these one conversation at a time with our companies. And when we are in dialogue, when they either look at the research or listen and then are able to make the changes, we just congratulate them and we keep pushing them further, rather than going to the SEC where you end up kind of in the news or in the media because of these actions. We get a lot of things done just using our investor voice. And one of those that has been pretty significant, I would say, is across our portfolio. As soon as the Dobbs decision was in court and being decided, we started talking to our companies about that. And we didn't call them to talk about what type of reproductive care they were providing in red states. we already had an agenda, and we used the time to talk about oftentimes financial performance, what was coming, changes in the company, certainly their scope of missions. We always talk about that. And then we saved the last 5 minutes of our conversations to bring this up. And we asked them what their plan was and how they were thinking about this Dobbs decision before it came down. And nobody had a plan. No one we spoke to did. That decision came out on a Friday in 2022. And by the following Tuesday, our staff had a letter out to every company that had employees in the US that could be affected by this, asking for 5 different points. And then we followed that up with phone conversations to see what they were doing for their women employees or any other employees that might live with or know a woman. So basically, what were they doing here? And we've had some pretty tremendous responses to that, with companies coming to us saying, we want to have best practices. We know we need to have that to be competitive. What can we do?
Yeah, I remember that one. I was on a 401k with a client or a call with a client in Boston, and they primarily are a female staff. I was merely chugging on through my presentation. The text messages started coming in, cell phones going off, and you could just feel a chill into the virtual room. And the happy faces of employees just became very somber. And then I looked at my phone and I'm like, oh God. So yeah, I remember that day very, very clearly. That was a tough one. And for those of you not remembering what Dobbs is, I popped that into the chat box. Folks, we're coming into the final 5 minutes. I did want to double check to see if Paul Herman a hip is still on. Paul, are you still with us, or did I know he's a few hours ahead of us and had an evening engagement? So I did want to get Paul's perspective of U.S. Europe relationships as seen from France, but Paul may not be here. Folks, let's go ahead and throw it open to questions. Anything and everything. Dr. Hull is at your disposal. You got an investment manager, folks. Looking. Rose, anything from you?
Well, I love the investor activism that Kristin and Nia practice, and just being very, very vigilant about the portfolio companies and making sure that they're all meet the investment thesis that Nia has. And I would love to be more involved in some ways in helping spread the word and get more participants to be involved in investor activism.
Wonderful.
Well, I
And
really
folks,
appreciate that, Rose. I'll just put a plug out for women in asset management in particular as a way to diversify portfolios, because very little known fact, women in asset management, a majority women-owned firms, make up 0.7%, so less than 1% of the 83 trillion out there. And so we do get the economy we invest in, and to have a larger share going to firms like ours that are asking about biodiversity, that are talking about healthcare, that are only investing in companies that have a fair and living wage, is going to be more important as we move forward. So certainly putting a plug out to working with the women.
I appreciate that. And yes, folks, it is possible to have the NIA Mutual Fund available in your 401k. And I'll be talking with many of you. Also, again, gold keeps coming up in conversation. And I remind everyone again about the money market. Kristin, any parting words you have for our audience?
Just thank you so much for having me. I always love being in dialogue, in conversation with you. Love to support green retirement. Want everyone's retirement to have green options. That is, some of our largest investment pools are our retirements. And I do believe that the sustainable future will have the best returns over time. And so looking both financially, socially, and for the advances of people in our own retirement. So thank you both for doing this important work. And thanks everyone for showing up on this day.
Appreciate it, folks. Everyone, take care. We'll catch up with you in May again at our first Friday 401k. You take care now. Be well.
Thank you, Kristin.
Bye, folks.
Thanks, everybody.